So, all right, great. Well, thank you all for coming. This is the annual meeting of the City of Albany Audit Committee. I'd like to call the meeting to order. Could we have a roll call, please?
Yes, Madam Chair. Members Smith. Oh, you're muted.
Yeah,
Mary.
sorry. Present.
Bessie
of
Johnson.
Here.
Alex Johnson II. And Brenneman. Is Commissioner Brenneman still on the? Then we only have 2 members present
Yes.
for a 4-member board.
Okay, maybe could we? Well, we have to elect the chair and the vice chair, so we don't have a quorum.
Somebody is joining.
Looks
right
like,
now.
yeah, somebody's coming in now.
Oh, great. Okay.
And hopefully that's Miss Brenneman.
It is. For some reason, it's not letting me get on with my tablet, so I just called it in. Sorry.
Okay, great.
Welcome.
Welcome, Jesse. Okay. All right, so that makes 1, 2, 3, 4 of us. So that should work. Okay. So
Yep,
now,
Madam Chair, I don't know, Gabe, did you finish your roll call?
I believe there's. Did I miss somebody? Is there a 5th member now?
No, I just that member Brenneman just joined us. So-
Yes, then we will have 3 of 4, so we do have a quorum now.
okay, and Alex might come on later. So, all right, great. So welcome. all.
Actually, I'm sorry, Counselor Johnson. Alex is actually in my office,
Oh,
so he's here too.
I thought it was in person.
okay.
Over here.
This is a great start. All right. So now we have the election of chair. So if I hear any nominations are open.
I'm happy to have the current chair continue.
Okay.
So I would nominate Counselor Johnson to continue as chair.
Okay. Do I hear a
I
second?
seconded it.
All right, great. All in favor, say aye.
Aye.
Okay, all opposed? All right, then we'll elect the vice chair.
I nominate Counselor Smith.
Okay, Counselor Smith, do I have a second?
Ooh, that's ominous.
No, there is no need for a second in the purpose of nominations.
Okay, great. Okay. So all in favor of Counselor Smith being the vice chair, say aye.
Okay.
Aye. All right. So we have myself and then Counselor Smith. Okay, so now we're on to the approval of the minutes from February 24th, 2021, exactly 1 year ago. Your motion to approve?
I would move to approve. I read them and they sounded good to me.
Mhm.
I remember that meeting. It was brief and uneventful.
True enough.
Yes. Okay, do I hear a second? Is there a second for the approval of the minutes?
Well, I'll second it. Yeah.
Okay, thank you. Okay, all in favor, say aye.
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 All right.
Okay, great. Now, and Jesse, are you still there?
I'm having to mute and unmute myself. So
Okay,
yeah,
no,
I'm here.
that's okay. I just want to make sure we didn't lose you. All right. So the next scheduled business is the presentation of the 2021 Auditors Report. So I guess Director Yeager.
Thank you. We have Brad Bingenheimer here from our auditor, Singer Lewalk, and Brad will be discussing our audit.
Great. Nice to see you again, Brad.
Yes, nice to see everybody again too. It's been a year.
Yes.
So where did the year go? I don't know. They seem to just fly by, it seems like.
Yes, it does.
So Anyway, so yes, so we have issued a report on the financial statements of the city. We issued a report on January 27th, and it's what we call an unmodified report, which in a nutshell says that, in our opinion, the financial statements present fairly in all material respects the financial position and results of operations for the city for the year ended June 30, 2021. Where did the city end up for the year? Well, at June 30, 2021, your total assets and deferred outflows was $511 million. Your liabilities and deferred inflows were 193,000, which gave you a net position at the end of the year of $318 million.
Doesn't make sense.
Okay, excuse me, Brad, did you mean 193 million?
I meant 193 million, yes.
Okay, all right. All
I'm
right.
like, wait a minute.
Hard to
I
say
know.
these big numbers sometimes.
I know.
Um,
Okay, thanks.
yeah, sorry.
That's okay.
And your net position increased by $15 million.
Is that-
And that you had total revenues of 125 million. So that's on the city, the government-wide financial statements. If you look down into the governmental funds of the city, which is everything except your water, sewer, and storm systems, your governmental fund balances ended the year at $53 million, with the general fund having an ending fund balance of 4.8 million. Your governmental fund balances increased $9.9 million, with the general fund having an increase of $1.6 million. So positive developments there in your governmental funds. Your proprietary funds, the net position of the water fund, ended the year at $83 million, which is an increase of $2 million. The sewer fund, it ended the year at 125 million, which is an increase of $2.2 million. The storm water fund ended the year with a net position of $1.3 million, which is an increase of $300,000. So all those trends reflect a positive improvement in this overall city's financial health. One of the positive factors that contributed to that is that during the year, the city received $4.2 million of ARPA funds that were recorded as revenue, but had not yet been expended. So those are funds that will be expended in your current fiscal year and the subsequent year. And that was the first installment of it. So the city will be getting a total of about $8.4 million in ARPA funds. A couple negative factors. Your overall net pension liability for PERS, that increased from 60.3 million to 75.7 million.
What?
You had a $15.4 million increase in your proportionate share of the PERS net pension liability.
So what from what to what?
And the contributions, your contributions currently for the year ended June 30, 2021, were 24.2% of payroll. So for every dollar of payroll, essentially, you were taking almost 25 cents and putting that towards PERS. Your other post-employment benefit liability was largely unchanged. It ended the year at 4.8 million, beginning the year at 4.9 million. So not much change on that one. One of the things to keep in mind about particularly the net pension liability is that that's always measured 1 year in arrears. So the numbers that are reporting the financial statements are measured as of June 30, 2020. The reason for that is, these are all done, developed by actuaries. It takes them a certain amount of time to to do all their work. And it's always based upon the work of the actuaries determining what your total pension liability is, and or the PERS pension total pension liability. And then they measure against that the fair value of the pension assets as of June 30, 2020. So you might remember June 30, 2020, what was happening with the investment markets? Well, that was about what, 4 or 5 months into our pandemic, and what did the stock market do, in it, that first part, it just tanked down. So there was kind of that, and so that's reflective of the net pension, changing your net pension liability for the year into June 30, 21. Looking forward to, perhaps this next year, June 30, 22, I'm expecting obviously that the value of the investments will have gone back up during that time period, without a significant change in that overall total pension liability, because that's based upon the projection of future cash outflows. So something to keep in mind as we move into the next year. In addition to our opinion on the financial statements themselves, we also issue 3 other reports in connection with our audit. The first one deals with the report required by Oregon regulations under the Oregon minimum standards for audits of municipal corporations. That report covers 2 areas. One is compliance with laws and regulations as required by the state statutes. And the second is a very brief discussion of internal controls. So we do specific tests on certain Oregon laws and regulations. We had, basically a couple findings in the budgetary area. One of them, I know we had quite a bit of discussion back and forth about, but essentially in preparing the budget for the year beginning July 1, 20, or for the period beginning July 1, 2021, there were budgeted transfers out of 22.2 million, but there was only transfers in of 18 million. And the city was thinking that they would be able to have flexibility regarding the transfer out of those ARPA funds to other funds, not knowing exactly where they would go. We did contact the Oregon Department of Revenue. They're the ones that basically interpret local budget law. And they did confirm to us that, yes, in your budget process, your transfers in and transfers out are supposed to equal each other. That's one comment. The other one, there was a very small over expenditure of $246 in the public transit fund. Hardly worth mentioning, but it's there. Then also we issue a report under the requirements of government auditing standards. Government auditing standards is very closely aligned with the Oregon minimum standards report, in that it's looking at 2 things again: compliance laws, regulations, and other types of agreements and contracts and such, and also internal controls. So as part of every audit, we look at an organization's internal controls. And of course, we've looked at the city's internal controls each year, consider changes. Throughout the pandemic, obviously there's been some changes in internal controls as people have gone to some remote working, when you can't be in the office, when you can be. So there were changes, but overall, we didn't see anything that indicated to us that there's any kind of weaknesses in internal control that need to be brought to your attention today. And then the other part of that audit, of that report, talks about compliance laws, regulations, and these go beyond just those required by Oregon statute, but any of those that could have a material effect on the financial statements. And once again, we didn't find anything that indicated that there was any kind of non-compliance with the laws or regulations that would be material to the financial statements. And then the fourth report that we issue in conjunction with our audit is our report under the requirements of the uniform guidance. And those are requirements requires to look at your overall federal expenditures. So federal money that you've expended, and we're required to determine to select certain programs for testing, and we test those in detail to determine whether you have controls in place over compliance and whether you actually complied with the requirements of those programs. So we didn't have any findings. The two programs we tested was the Corona Relief Fund with $1.3 million of expenditures, and then your public transit grant of $1.4 million. And you had total expenditures of federal awards of just over $4 million. So we essentially tested 69% of your total federal expenditures with those two programs. And as I said, we didn't have any findings under those requirements either. So that's kind of the audit report and our work as your auditors. If you have any questions, I'd be happy to try and answer them.
Okay, does anybody have any questions for Brad?
So where did the money we received from the settlement, where's that impacted at all? Is this reflected in here at all
Which settlements?
for the water system?
I think we got that this fiscal year.
Oh, this fiscal year. Okay, never mind.
Oh, okay.
We'll check
Yeah.
that for you.
Okay, great. I mean, I have one question here. Brad, with the PERS, I want to make sure I wrote it down right. We went from 16.3 to 75.5. Is that right?
And you went from 60.3 million to
There we go.
75.7 million.
Okay, well, yeah, that makes more sense. I thought, how can we go that far? All right,
Yeah.
that's not as bad as I thought it was. Okay.
No, but still, it's over a $15 million
So
change.
Yeah.
$15 hit, yeah.
It is.
Um,
It's a lot.
So is that
Yeah,
over the
but-
biennium or is that just year over year?
That's year over year. That's a 1 year period change. But as I said, you have to consider what drives that change when, it's two factors.
Mhm.
It's the present value of future cash outflows for PERS.
Mhm.
And the actuaries, they do their work to determine, overall life expectancies of retirees, the projected, payments out to them, bring that back, present value that using, a discount rate. That number doesn't fluctuate a lot year to year, because the payments out to retirees and the actuaries, how they do that, they kind of smooth that out over the year. So there shouldn't be big fluctuations in those expected future cash outflows. The retiree population is what it is, and of course it is growing. But they factor all those in their calculations. The thing that really fluctuates up and down, though, is that fair value of the investments, because like I said, the total pension liability, they use some actuarial methods to kind of smooth that out over time, whereas your investments at a point in time are what they are. And so with it being measured as of June 30, 2020, when the markets were way down, you're going to get that big difference in that net pension liability. Where come, June 30, 2021, those values will have largely come back. So I would expect to see that kind of reverse itself this next year. What is kind of, important to note is the trends in your contribution rates for PERS. When every dollar payroll, you're basically spending 25 cents contribution to PERS. That's the one that kind of has the immediate impact on you. So that's kind of the one that I kind of watch over time. And of course, we've seen that increase over time. And there's actually a chart in the annual comprehensive report. It's back in the section called required supplementary information.
I sent the
Let
links.
me see if I can get the page number for you real quick. And so you
Yeah.
can see kind of how that has trended over the years. Sorry, I have it up on my screen. It takes a while to page down through it. It's a long report.
While Brad's flipping through the pages, yes, I can confirm that the settlement proceeds were received in September.
Oh, okay, great. Thanks, JK.
Yeah. So it's on page 108 of the report. If you're looking so it's on page 108.
Oh, okay.
And so if you were to go back, this is currently 8 years. We have 2 more years. We were supposed to be presenting this as a 10-year schedule. The information, was starting to accumulate back in 2014. But back in 2014, your total contributions to PERS were about $3.4 million. And that represented 14% of your covered payroll. Whereas for the year to June 30, 2021, your contributions were $7.5 million, which, like I said, represents 24.2% of your covered payroll. So if you look at that trend, you can just see it keeps growing.
Mhm.
And that's going to be what really impacts the city's ability to maintain the level of service to your citizens when you're having to put this money aside for PERS.
Hmm. Okay, well, thank you. Thank you for that. Anybody have any other questions? Sounds like it's a promising, positive report.
So I would also like to say that the issue that we had with the budgeted transfers in, not matching the transfers out, will be corrected through a supplemental budget this fiscal year.
So before July.
Yeah, it just has to be approved by union.
Oh, okay. Because I guess I'd say there was a difference in it, and it'll be fixed with a supplemental budget, but what was the cause of that difference?
Well, I think as Brad explained, we understood that the transfer, we weren't planning on spending the transfers out in the last, we didn't know where we were going to spend ARPA funds.
Okay,
So,
okay.
So what we did is we did a reserve, what we were thinking of as a transfer reserve.
Yeah.
So we budgeted the transfers out. We just didn't have the transfers in there because we didn't know where they were going to be going. And so then after talking with our auditors and they reached out to Department of Revenue, we found out that that wasn't an okay way of doing it. And, we'll know that going forward and we can correct it. It's nothing that can't be corrected.
Okay, great. Yeah, that makes sense. That makes sense. Okay. Any other questions? Mayor?
No, I'm good.
Marilyn? Jesse?
Nope.
Okay, I was waiting for you to unmute. All right. Okay, and so let's see. Peter, do you have anything to add? Should we go on or?
No, I don't. You said it sounds like a positive report, and I know what you meant, although that was ironic right after we heard the PERS story from Brad.
Yeah, I know.
But I know what you mean.
Yeah.
And you don't get a good report without a lot of hard work from Gina and JC and Brett and the rest of the finance staff. So I'll just say thank you to them.
Oh yeah, I agree, because to take care of an organization this large and this much money and going to different places, I can't imagine. I have a tough time balancing my checkbook, so.
Well, we would also like to say thank you to all departments, because if they weren't doing things the way they needed to be doing it, we wouldn't have had a good report. So, we want to thank all of them, but I especially want to give credit to Brett and JC. They did the vast majority of the work.
Well done.
Yeah, well done, Brett and JC. All right. Okay, Brad, anything else?
No, just it's always a pleasure to work with staff there at the city. We always enjoy them. You know, we do ask 1,000,001 annoying questions. You know, that's kind of our job.
That's right.
We do come in and we kind of disrupt their day-to-day, you know, work. But they're always very helpful, answer all our questions, give us the information we need. So we appreciate working with city staff.
Well, and I'm sure
Thank
it
you.
goes both ways because you've been the auditor for a long time, so you know our ins and outs. And was it 2 or 3 years ago we went through that big change? That was just something else. I can see Gina yell, yeah,
Yes.
But
Yes.
yep. First, I want to apologize to you, JC, because I called you JK a little bit ago. I'm sorry. I was thinking of the book, I guess. All right, so let's see. I guess let me see. Let me go back to my agenda here. Shoot. There we go. I'll get there. Okay, so with the auditor's report done, then looks like we go into the transit lodging tax audit. Handout.
Okay.
What?
Sorry, that was weird. That was some feedback.
Oh, okay. All right. Yeah, so it looks like Director Yeager, and it says a handout at meeting, but I'm sure you just have a screen to show.
I'll show you the screen. I had sent these out through email earlier today,
Okay, yes.
so you should have received those. I'll go ahead and share my screen, or I'll attempt to anyway.
Mhm.
Okay. Hopefully you can all see it. Zoom always confuses me because I can never see what's on the screen that I'm sharing. You can see my memo.
Can you make it a little larger? There we go. Thank you.
Is that better? Okay.
Yes, that's better.
So this year we went to 4 different hotels, as I listed on here: Super 8, Comfort Suites, Holiday Inn, and Best Western. You know, we've seen the last couple of years that there seems to be confusion around the form that they fill out for submitting their transient lodging taxes. And so last year we tried to make the form a little bit more clear and highlight the area. In line 1, one of the things that we want is total gross revenues. So if a room could have a tax on it, we want that to be included. We want to include the taxes that they're charging on it also. One of the hotels that we went to, Comfort Suites, didn't include the non-taxable rooms. So those rooms where they were renting them out for more than 30 days, or those rooms that were rented out to federal employees on official business. We don't charge tax for those. But we have a line on the form that deducts those out. So by them not including that in the first line, it's like they were deducting them twice. So that was the first issue that we found. So the other issue that we found with 3 of the 4 was that they weren't deducting their Oregon state taxes that they were collecting. So they were paying taxes on taxes, basically. So we talked to them about that. And what we did is we let them have an opportunity to go back and correct the errors that they had. So it resulted in credits for 2 of the hotels, and it resulted in an underpayment for one of the hotels, and that's been taken care of. Comfort Suites. The other thing the Comfort Suites had is they weren't deducting their online travel company revenues. So they were including those in their gross revenues, but they were paying taxes on taxes that they didn't collect. OTCs remit directly to the city. So we really look at this as a learning opportunity for hotels. So when we find these mistakes or find issues that they're having, we really want to make sure that they have an opportunity to correct those. Mm-hmm. We let them do that. We don't penalize them. So for the Comfort Suites who had an underpayment, we're not going to charge them penalties on that. we're just going to give them an opportunity to correct it. And then going forward, they'll know exactly what they need to do. We do require certificates to be posted within customer view that they are able to collect tax revenues on behalf of the city. And everybody had that except for Best Western. One of the hotels actually had the old certificate and they had the new certificate, which was kind of funny. We told them they could just, show the new one. That was totally fine. We're sending we sent Best Western an updated certificate, and they have assured us that they will get that posted.
What about, do they collect any taxes?
Yes.
Well, it's just zero here.
That's for overages and underages. So yeah, they collected, their backup completely matched the forms that they sent in. And so they appear to have sent us the correct amount of money each month. This is the 15th year we've been doing this. Hotels that haven't changed ownership have been audited 5 or 6 times. But I have to say, there seems to be a lot of transfer and ownership or a lot of name changes. So, what was once, I'm not even sure what was Comfort Suites before. It's now Comfort Suites. It's like, okay, even though we used to have a Comfort Inn, that's now, I think, a Quality Inn.
Oh.
So that'll happen. So the discussion regarding state of Oregon collecting transient lodging taxes is still ongoing. We want to see the benefits of that. Right now, we don't have a lot of numbers coming out of that. And so because we collect on behalf of Lynn County and we do get to keep 5% of those revenues that we collect for them, we would really like to see if there's enough companies like Airbnb and Vrbo that would contribute enough to our taxes that it would benefit us to let the state collect, if that makes sense.
Yeah. Did you say with Lynn County we get 55%?
5%.
5%. Thank you. Well, I tell you what, I got my numbers, man. I'm giving some of it good and some of it bad. All right, thanks. Okay. 5%. Okay. Anything else, Tina?
No, that's all I have for the transient lodging tax audits. If anybody has any questions, I'd be happy to answer them.
Yeah. Any questions?
So I have one, Counselor.
Okay.
So are we currently collecting VRBO or Airbnb at all?
I'm sorry, I can't understand.
Are we collecting Airbnb or VRBO?
Oh, there we go.
We don't currently have an agreement with them.
Okay.
We reached out to them and their attorneys got back to our attorney and said that they don't think that our code requires them to pay it. So we could go out and change our code to allow us to do that. But if we end up going with the state collecting, we would have to change our code also. So we don't want to change it and then have to change it again.
Yeah.
I think we're just sort of waiting to see if we're going to have the state of Oregon collect. If we do, then we'll change the code to reflect that. If not, we will try to pursue the Airbnbs and Vrbos and other travel companies like that.
Yeah, that makes sense because we don't want, why change it twice when you can only, change it out at the same time. Okay, any other questions? Counselor Smith?
No.
No? Okay, Jesse, any questions? I think that was a no, but I'm not sure. Okay, and Jen, I did have something. The differences, you said the name changes, the owner changes and stuff. Why was it so confusing this year for them?
I have no idea. We had questions about it last year, and so we thought we were making it very clear by calling it out on the form. Let me see if I can find that form. I can show you what it looks like. Okay, share this. Okay, this is what the form looks like. So when they go to pay, they can go online on the city's website. There's a fillable form for them that calculates out what their taxes will be for the city of Albany and for Lynn County. So in this very first line right here, where it says total gross rent, we had updated it last year to say including city, county, and state taxes collected. We highlighted that just so people would see what they were supposed to include in that number. The next one is Oregon state tax collected. That's been the same since we started this form. No idea why they weren't putting their numbers in there. It's right there. It's an allowable deduction. No idea. And then the rest of them, we have other deductions, the rent paid by month. And it explains that guests paying for rooms more than 30 consecutive days, federal employee on official business, temporary emergency housing, rent less than $2 per day, and then rent payments made through an online travel company. And that's tax that is collected by and remitted by the OTC. Comfort Inn also failed to include that number in that line, that deduction. I have no idea why this has been an issue for them. But again, we're trying to educate and sit down with them and walk them through it so they understand what numbers they need to be using. We'll show it to them on their backup documentation. And we're just trying to catch these as we can. One company did everything correctly. Best Western, other than the certificate, but their numbers all tied out. So we will continue to help educate those hotels that seem to have questions or maybe do things. We're also trying to catch these on the front end. So when they turn these forms in, I'm having our accounts payable, or I'm sorry, our accounts receivable person review them carefully. And if she's already caught one where they weren't deducting their Oregon state tax collected. And so she contacted them and told them, hey, you're not doing this. And why don't you go back and review the ones that you've done? And then you can submit them and we can give you a credit. So we're trying to work with them.
Yeah, and I bet they probably appreciate that, because I'm thinking they probably, if the ownership changed and whatever, they probably have different people doing it, and it could be anything. But I'm so glad you're working with them. I think that's good partnerships. That's what it is. Okay. Any other questions that we have? Okay, great. Well, it looks like the only thing left is we have business from the committee. Anybody have anything?
Well, I want to apologize. I totally misread the meeting invite. I came over here. I didn't run any stoplights, but I was close.
Oh, that's okay. You're here. You made it.
You're exercising our hybrid capability.
There you go. There you go. Okay. Jesse, do you have any questions or comments?
Nope, just sorry I couldn't get on the actual Zoom.
Oh, that's okay. That's all right. Hey, we'll catch you next year. All right, Councilor Smith.
I don't, thank you. I hope I can live up to the role of vice chair. I'm mathematically challenged, but I did read the materials. They made sense to me, and I appreciate Director Yeager showing the form that the hotels have to fill out. It reminded me of the days when I was still doing my own income taxes, and the dividing line between that and today when I said I can't deal with this anymore. That form looks like the old 1040 short form, and I don't know why it's hard to fill out. So anyway, if I could figure it out, I think other people probably can. Thank you for letting me serve on this committee.
Oh, you bet. Let's see. Anywhere else? Brad, do you have anything else? Okay. All right. I think you said no. See, I did it again.
Yeah.
JC?
Yeah, no, I don't have anything else today.
All right, great. Thank you. JC, anything? No?
I don't have much, just a big thanks to Brett, actually. He actually was our project manager for this year as part of his continual education and growth. And we're excited about his career here at the City of Albany.
Great, thanks. Okay, Brett, do you have anything to say about your first time doing this?
Well, this isn't my first time doing the report.
Oh.
This is my first time having to build a lot of the reports from scratch in terms of changing how we did the software for it. So that was a big change in setting all of that up this year.
Yeah, I just can't imagine. I mean, I like math, but when you get into something like what you guys do, not a clue, not a clue. Brad would not be happy with any of my reports, I tell you. All right, if there's nothing, oh, Peter, anything for the good of the order?
Nothing to add. Thank you,
Okay,
though.
great, you bet. All right, so with that, we will adjourn. Thank you all for coming, and we'll see you next year.
Thank you all.
Thank you.
Bye.
All right, good night, good afternoon.
Thank you, Jan.
right.
For some reason, I sound